Top stories. Indices scale a 9-month high on hopes that US Fed will slow the pace of interest rate hikes, gains led by banking, IT and pharma companies. As markets hit a 9-month high, Udayan Mukherjee in conversation with market guru Prashant Khemka. Should you sell or is there more upside in the near future? Chinese-owned MG Motors under government scanner for alleged invoicing fraud. Managing director and Chinese officials in the company summoned by the Registrar of Companies. It's a bumper festive season for the economy. Auto sales scaled new highs as customers return to the showroom. GST collections above 1.5 lakh crore rupees, the second highest ever. Reserve Bank of India begins testing of the central bank digital currency. Dealers report a few glitches in bond transactions. Retail testing likely to begin next month. Indian indices closed at a 9-month high, driven higher by strength in global markets and expectations that the US Fed would slow its pace of interest rate hikes in the coming months. The Nifty 50 closed 133 points higher at 18,145, while the Sensex ended at 61,121, up about 375 points. Gains led by banking, IT and pharma names. Among the top gainers in the Nifty, Adani Enterprises, Divi's Labs, NTPC, Power Grid and Infosys. And strong moves at that. Nifty losers were led by Axis Bank, United Phosphorus, Eicher Motors, Maruti and Reliance. Just a few on that list today. Axis taking the primary brunt there. With major indices hitting these new high levels, what should be your next step? Is this the start of another rally? Earlier, Udayan Mukherjee and I spoke with Prashant Khemka of White Oak Capital. Here's an excerpt of that conversation.
Yeah, it's been a remarkably resilient market. Let me ask you if you're surprised with this kind of resilience, and more importantly, do you see it lasting?
Certainly. Diwali wishes to you and Abba as well, and thanks for having me on the show. So, Udayan, if I can segment my comments into three aspects: the economy, the corporate, and the market, and look at these from the global as well as the Indian perspective. So what's troubling? The global economy first. So 2 years or 2.5 years now ago, there was this, when COVID hit, the big worry was that we would have demand collapse, which would result in a supply glut. And that's why you had prices crashing and worries about deflation. That's why you had negative oil prices in the spot and so on and so forth. Very soon, the reality turned out to be barely any demand destruction, but in fact, there was supply disruption. And hence, inflation picked up. So the biggest worry or problem or issue the global economy has been grappling since then is inflation. Initially, it was expected to be transient because it was COVID-led supply disruption. So as COVID would pass through, the supply chains would fall back in place. Now that COVID disruption hasn't quite resolved itself because China, which is a major link in everybody's supply chain globally, is still enforcing a COVID zero policy, which is leading into feeding into the supply disruption. And while this was continuing, there was a much larger shock to and a much major supply disruption that was due to Russia-Ukraine war. In many commodities, supply got cut down, or again, the disruptions caused long delays. So as a result, spanning over these 2 years now, inflation expectations have become more entrenched and can no longer be viewed as transient. And hence you see globally interest rates climbing, the longer term interest rates climbing, as well as the near term, the Federal Reserve Bank, as well as other central bankers boosting near term interest rates to contain these inflation expectations from getting entrenched. Now, this is the global situation. In India, it's not being felt as badly because Indian inflation basket is quite a bit different from the US or European basket or global basket in general. So at times when we have high inflation, these other countries and other regions don't have any inflation. And this is a time when we are having higher than normal inflation, but not something that is outside of the range that we have been used to. In Europe and US is the first time after 40, 50 years that they've seen inflation climb up as rapidly. Otherwise, inflation since the early 80s has been on a one-way downward slope globally. Whereas in India, we had double-digit CPI inflation, you'll remember, not long ago. I mean, 2008, 2009, due to various reasons, we had even in the teens, the CPI inflation. So right now, inflation in India is 7 to 8%, call it high single digits, which is within the range of what we are used to. In the last 20-year average inflation itself being 5 to 6%. So 7, 8% in context of 5, 6% isn't hurting as much as it is hurting the developed world with 7 to 8% compared to 1%. So that's one point as it relates to economy, with inflation being the biggest issue globally, not as much in India. When you look at corporate sector, obviously the economy, besides inflation and as a consequence of inflation, there's slowdown in the US, and as a consequence of inflation plus the war, there's major slowdown expected in Europe, which is then hurting corporate sector in these countries as demand slowdown, as they are stating a demand slowdown. Whereas India, to some extent, while in India, you see there are conflicting forces, while there is some slowdown because of global slowdown impact. At the same time, India is benefiting from the China plus one and now Europe plus one strategy that many corporates are pursuing in their sourcing and supply chain arrangements. And at the same time, if you look at sector by sector, like the banking sector has never been in as good a shape as it is today, and it's a large sector of the economy. And so corporate India is not expected to have such a slowdown in earnings as the slowdown in earnings growth in the developed world and even in China and other EM countries. And as a consequence, the market has held up better in India, has been more resilient in India, because there isn't the expectation of decline in earnings or such a major sharp slowdown in earnings growth as it is elsewhere in the world. And there are other factors, not just earnings growth, other factors besides economy and corporate. If I may club them in the governance bucket, China has undergone a major change in its governance over the last few years, and it's been enshrined with the third term. So it's moved from what was a one-party system, which is at least partial one-party democracy within the party, to more of a single-person rule, and that's caused a substantial de-rating in China, and that's benefited Indian markets with increased flows compared to some of these other countries which are facing trouble.
Right.
Prashant, markets have made quite a, valiant comeback in the last few weeks. But given the backdrop that you've just described, how would you advise really maneuvering the market right now? Would you stick to some of the safer plays? Would you go with, some of the stocks that have a very bullish view with regards to domestic economy and the kind of growth they could see on the back of that? Financials have been a big talking point of late. Is that a story that you're looking at? What would be your approach?
Certainly, Abha. So just to be clear, our team and our approach at White Oak is very bottom-up stock selection driven. We don't try to time where we are in the cycle and how that might impact the different sectors. We rather focus on identifying and investing in what we believe are the best companies at the most attractive valuations in each sector, and that can outperform over the cycle their respective sectors. And if we are able to do that across all sectors, then it doesn't matter where the market is headed, is our belief. But having said that, where we are finding the most attractive opportunities today, Abha, it's also in line with what historically has been the case, is in private sector financials, because there are some extraordinarily well-run private sector financials in India. They're I would say not just within Indian context, but having invested in financials or banking sector around the world, I would say some of the Indian financial sector companies in the private sector space are the best compared to anywhere in. are available at fairly reasonable and I would say attractive multiples compared to their own past, but also now compared to at what valuations they are compared to some of the emerging market peers. So that's one area where the team continues to find a lot of opportunities to invest. Another area is the whole consumption related, not only staples, but consumer discretionary segment as well. We've always found some very good opportunities. Yes, if there is a slowdown and if there's a sharper slowdown, then it would hurt the discretionary demand as well. But again, we can't take a top down view on the economy and then bet the whole portfolio or tilt the portfolio to align with that view. In my experience over the years, that just induces a lot of volatility in performance without adding any alpha or without adding any performance. So we have a balanced portfolio, which we expect to do well, regardless of where the economy or the market is headed in the near term. And in the long term, the stock selection should shine through. So consumption related, particularly discretionary consumption related, we continue to find a lot of very attractive opportunities. And then the third segment I would highlight is, which has been under pressure of late, is what we call value-added exports, where India has a strong positioning. And so when I say value-added exports, it's not necessarily to do with bulk commodities, which India anyways has fairly less of. But for example, IT services is entirely value-added export. Okay. Also specialty chemicals or pharmaceuticals, these are all examples of value-added exports. And we continue to find attractive opportunities in both IT services and specialty chemicals in particular.
Let's take a very quick break. We'll be back with more on the other side.
Ever heard of zombie fires? No, I'm not talking about flesh-eating maniacs. This is a rare phenomenon that is also known as overwintering fires. This occurs mostly in countries like Russia, Canada, and Alaska. So what are zombie fires really? Peat fires burn underground and are very difficult to detect. They're also known as zombie fires as they can burn underground and reignite weeks or months later. Climate change is drying peatlands and making them more susceptible to fire. During a fire, burnt trees fall to the ground, igniting the flammable peat in the soil. The embers can continue to burn more than a meter underground for weeks or months, even in winter in certain regions of the world. The embers are fed by peat, a spongy material rich in carbon formed by decomposition of organic matter. They burn underground and return to the surface where in dry and windy conditions they can start a new fire.
Welcome back. You're with us here on Business Today. IPOs are in the market this week, ready to mop up nearly 4,700 crore rupees. One of those public issues is of Bikaji Foods, a big name in the mostly unorganized markets of sweets, namkeens and other snacks. So what are their plans and how will they invest the IPO proceeds? My colleague Sakshi Batra got some answers from Deepak Agarwal, the company's managing director.
I realized that today I am on my peak energy and I can visualize, I have a proper vision for my company for next 5 to 10 years, how I can progress, what I can do. So I thought, let's do the IPO right now. This IPO is for the ethnic snacks and for the ethnic brand, and no one halwai is called in Indian market halwai. No one has a IPO listed. Right. So this would be the first company in PSC or in IPO who will be listed as in halwai company or as in bhujia ka share or this Bikaner movement is a very proud moment for everyone. And right now we have a 78% and that is the pre-IPO, but after the post-IPO the total would be 76.5%. So still 1.5% would be left to release in next 1 or 2 years maybe.
Another Chinese company operating in India is under the government lens. According to sources, the Registrar of Companies has summoned the top management of MG Motors India for questioning on alleged audit deficiencies. The company's auditor, Deloitte, has also been issued the summons. Sources say that invoicing fraud has been detected during a probe of the company's books by the Ministry of Company Affairs. The company has issued a statement that it received a notice on why it had operational losses based on its annual report for 2019-20. It reiterated that it's a multinational with books maintained as per Indian accounting standards and audited by reputed audit firms. For more on this, we're joined by my colleague Karishma Sudani. Karishma, take us through the latest on that front.
We're picking up from our sources that Ministry of Corporate Affairs, in fact, Registrar of Companies, Delhi has conducted a probe investigation with MG Motors, and the latest that we are learning is that government has found certain kind of alleged fraud in terms of invoicing with MG Motors, for which it has also summoned the top management of MG Motors along with its auditor Deloitte. In fact, we are also being told that the management of MG Motors, which majorly consists of Chinese officials followed by the managing director who is Indian, have been called to the ROC Delhi office in order to explain the alleged irregularities that MCA has found. Now, we need to understand carefully that government in past few months have been going very strong on companies having strong links with Chinese companies. MG Motors in its response has also conveyed to Business Today Television that they have received a notice and they've been questioned on the persistent loan losses that have been listed in their books of accounts, for which they will, of course, cooperate completely with the government on the investigation.
Thanks for that, Karishma. Now, it's been a bumper October for auto companies, with several recording record sales in the festive month. Among the four-wheelers, Maruti Suzuki led the charge with a 21% growth in sales over the last year. The largest auto company in the country sold more than 1.67 lakh units. Hyundai sales were up 30% at 48,000 units, while Tata Motors posted a healthy 33% growth at 45,423 units. Mahindra rode on the success of its XUV 700 and Scorpio N launches to post a 60% jump in sales. The story, however, is more muted in the two-wheeler market, with Bajaj Auto posting a 10% drop in total sales. TVS Motors, meanwhile, is in striking distance of Bajaj with a 2% growth. GST collections in October have risen 17% to cross the 1.5 lakh crore rupee mark yet again. The amount that's been mopped up this time is the second highest in collections ever, only surpassed by the 1.67 lakh crores collected in April. To understand the significance of this, we're joined by my colleague Karishma Sudani again. Karishma, take us through these numbers and really what this implies.
Well, absolutely quite a historic collection if we talk about the numbers, because for October 2022, the GST collection, that is the goods and services tax collection, has been close to rupees 1.52 lakh crore, which turns out to be the second highest since implementation of the GST regime in India. Of course, April 2022, that is with the month that we started this fiscal year with, was close to 1.68 lakh crore. Turns out to be the highest until now. But the government in past few months have been pretty positive and affirmative on the GST collections. They're also hopeful that collections henceforth will cross the 1.5 lakh crore mark easily. And because of Diwali festive season in October, it has turned out that higher consumption and economic recovery has helped in higher GST collections. Now, you say fortunately or unfortunately, but inflation has also contributed because of increase in prices of goods and services. There has been an increase in the GST collection for the month of October.
Great, thanks for that, Karishma. And here's what else is making news in the corporate world. Tata Group reportedly planning to hire as many as 45,000 women at its Hosur plant, which manufactures iPhone cases. The factory already employs 10,000 workers, most of whom are women. ABB India has opened its first smart instrumentation factory in Bengaluru for mass production of measurement and analytical devices. The new plant will manufacture field devices for various industries, including power, oil and gas, and pharmaceuticals. Good news for sugar companies, with the Union Cabinet likely to increase prices of ethanol and other byproducts this week. The move will give sugar mills additional revenue and ease the pressure on them to make timely payments to sugarcane farmers. Inflation is likely to dampen prices and demand for gold in the coming months. According to the World Gold Council, rural demand in October to December quarter is likely to be much lower than last year, despite gold prices being at two-year lows. Two-thirds of India's jewellery demand does come from rural areas. The dip in demand could bring down India's total gold consumption this year to 750 tonnes, down 6% from 2021. There is, however, a positive side to this, with a fall in gold imports expected to help India's trade deficit and also support the rupee. The festive season has been particularly dull for the property market in Mumbai. Property registrations in the country's financial capital fell 3% in October year-on-year and 4% sequentially. The sentiment has taken a hit from rising interest rates and house prices. According to data from the Maharashtra state government, Mumbai saw 8,276 units registered last month, netting the state government a revenue of 710 crore rupees. That's up 28% on the year, but lower than 730 crores collected in September. The pilot project to test the digital rupee, which began this morning, has not been without hiccups. According to dealers, some of the transactions were stuck during the test runs. Announced in this year's budget by the finance minister, the central bank digital currency is a major leap towards transparency in money transactions. But what is digital currency? How different is it from digital payments? Let's look at this report.
I present the budget for the year 2022-23.
From the day Finance Minister Nirmala Sitharaman announced the government's intention to launch a digital rupee, it has taken the project exactly 9 months to gestate to the next major stage. The Reserve Bank of India today started a pilot project to test the e-rupee involving 9 major banks in the settlement of secondary market transactions in government securities. According to the RBI, use of the e-rupee will significantly reduce costs on the bond trading platform. The next step of using the digital rupee in the retail segment is expected to be taken next month in select locations in closed user groups comprising customers and merchants.
So what exactly is central bank digital currency? There's been a lot of talk about it in the past 1 year, ever since the crypto mania swept the nation and also fizzled out. Moreover, how are they different from cryptocurrencies? Another question is, how is CBDC different from digital payment systems, which have so intricately been a part of our life in the past few years?
The differences with cryptocurrencies are stark and obvious. One is a legal tender, the other is not. One is backed by central bank, the other is backed by a mercurial market. One has the same value as the rupee, the other has a notional value. One is issued by the RBI, the other is mined in mysterious ways. However, the more complicated comparison is between the e-rupee existing digital payments. While the e-rupee is a legal tender issued by RBI, a digital payment is only entries in a bank ledger, a transaction. Both, however, hold the same value as a rupee. The CBDC is the liability of the central bank, while digital payments are the liability of bank handling the transaction. The e-rupee will be a direct exchange between the payer and the payee, while digital payments usually involve a third party. RBI is also devising ways to ensure offline availability of the e-rupee. In contrast, digital payments need internet connectivity. For the government, the biggest challenge in the launch of the central bank digital currency is the security implications. A recent report by the RBI highlighted digital fraud, data breaches, lack of privacy, and digital security incidents as the biggest risks.
It's not just a new concept in India. CBDCs are new to the entire world. Only 10 countries have officially adopted CBDCs as of now. The Jamdex and the Sand Dollar are two CBDCs that are in function in Jamaica and Bahamas respectively. Closer to India, China is testing out the digital version of yuan, but it has not implemented it yet. So if you're waiting to use the e-rupee, hold your breath. It might take some time. This was Akanksha Chaturvedi for Business Today TV.
And that's where we leave it on the show tonight. Thanks so much for watching.